Good morning, everyone. We're going to get started here in about 1 minute. We're just going to let all of our registered attendees to sign in here for just about another minute here, and then we'll get started. Well, good morning, everyone. Welcome to our digital protection webinar here, integrating cybersecurity, insurance, and fraud prevention strategies for businesses, brought to you by McGriff, which is part of Marsh McLellan, along with Eagle Bank and Opfinity. We appreciate your time and set aside for the next 1 hour. You're going to be hearing an interesting perspective from both an insurance firm, IT, and then a commercial bank. The first person that's going to be speaking this morning is Edward Lloyd. He's the strategic team leader, professional in cyber risk, and executive and professional specialty practice. And our next speaker will be the CEO of Opfinity, Michael Drobnis. And then last will be Herman Abdelis, who's the Treasury Management Officer here at Eagle Bank. So without any further delay, I'm going to turn this over to Edward. Edward, please start your presentation.
Thank you, Matthew. Well, good morning. My name is Edward Lloyd. I work for Marsh & McLellan agencies in the Mid-Atlantic region. Marsh & McLellan agencies and McGriff joined forces very recently. So I'm pleased to be able to talk to you all about cyber insurance policies. Of course, when we talk about the mitigation of cyber threats, main areas that we're going to cover today are in terms of arranging a cyber insurance policy and also security. And as you'll see, these two are very much interlinked. Now, when cyber incidents happen to companies, they make the news. The first real mega cyber loss that the market saw was at Target in 2010, where credit card information was stolen by Russian hackers. And more recently, we've seen the CrowdStrike incident, which took Delta Airlines down for a number of days back last year. And also, even last month, we saw the Oracle privacy information breach, which has affected their cloud service. So when we talk about cyber insurance policies, they're extremely broad. And not only does it cover the legal liability aspect of having data taken away or data exfiltrated from an insured's network, we're also talking about claims for ransoms or extortion. We're also looking at coverage for recompilation of data that might have been taken out or otherwise compromised. The policies also cover the relevant breach expenses, which cover the computer forensics, and also there's coverage for business interruption. And we also arrange policies that include monies that have been taken from the company via social engineering means. So when we talk about cyber insurance, we're talking about a pretty recent form of coverage. The policies have only been around for the last 25 years or so. And really, in the first instances, they were pretty limited and rather expensive. So it's only been really since probably 2010 onwards that these policies have become more popular and are selling more, largely because they're getting less expenses, and also the coverage is broadening out as insurers realize that there is this is a profitable market for them. So when we look at the market altogether, really, initially, and indeed between 2015 and 2018, this was a very profitable line of coverage, and more insurers were looking to take advantage of that, come into the market, provide wider coverage. Typically, loss ratio is around about 50% at this time. However, the claims aspect of this coverage really did start to pick up in 2019 to 2020. We saw the introduction of ransomware type claims made by nation states such as Russia, North Korea, and China. And there was a huge spike in this time in ransomware type losses, where a company's data is encrypted, they cannot use the data, and the only way they can get it back is to pay a ransom to the gangs, the perpetrators, the bad actors who are launching the attack. So what the insurers had to do was to scrutinize their portfolios. Because the losses were so big, some insurers actually backed out of the market at this stage, and others were looking to write the risks, understanding the actual exposures that they had. Up until this point, really, there wasn't much conversation between underwriters and the insureds about security. However, these between 2019 and 2021, insurers adjusted so that they were taking into account the security that's in place by an insured, and indeed were looking to impose minimum standards on insureds in order to ensure that they had the adequate controls in place for them to be an insured. Also at this time, to counter the losses, underwriters were looking to increase rates significantly. Many insureds saw their premiums more than double, their retentions increasing, and also sublimits applied for certain losses. In addition, insurers were also looking to exclude cyber from other policies, such as general liability and D&O policies as well. So the strategy between 2022 and 2023 included improving security controls. So this meant that ransomware losses were moderated. Insurers continue to evolve underwriting to focus on security controls and also catastrophic risk exposures. Rates began to stabilize in 2023, and now we are looking at working in a softer market. Rates are indeed improving year on year. And at the moment, the market conditions are definitely in a soft cycle. Despite the fact that ransomware losses went up by 16% in 2024, we are seeing decreases in premium year on year. Insurers remain concerned about the aggravation of losses, particularly in respect of vendors providing goods or services. If there was a catastrophic outage, say, from the AWS or Amazon cloud, then underwriters would have a significant and catastrophic potential loss of many companies being affected by such an incident. So the market drivers, insurers focus on potential catastrophic losses and third-party risks and dynamic privacy regulations. Privacy regulations are in place state by state, not at a federal level. And each state has its own regulations which vary in its which vary in the duties it applies upon companies. Some are much more strict than others. And indeed, states like California have recently enacted updated privacy laws. Other states are following to make those duties even stricter. In addition, insurers have been seeing claims related to data tracking and also biometric information that's held by insureds. So the continued threat of ransomware and data exfiltration is very significant for underwriters. The average ransom for companies over 250 million in revenue is around about 3.4 million. And also social engineering fraud or business email compromise. These are the types of losses that are instigated normally by the bad actors trying to phish employees. And these are also, very significant year on year. So the rate trends, at the moment, we're looking at around about a 5% reduction year on year in renewals. So, this is a good time to market your risk if you're working with your broker, or if you don't have the coverage, to put it in place, because it's very good value at the present time. The outlook is that the cyber market will likely continue to soften in 2025, with markets looking to meet targets to increase the size of their insurance books, or their cyber books. Although with claims reported increasing by 16% in 2024, we can certainly foresee pressure on rates later in 2025, and maybe this time next year we might be looking at increases year on year. So underwriters' concerns include the privacy and regulatory aspect. So states are making, insureds' duties more strict as they enact new legislation. Data tracking software is a huge issue. The metapixel type software, where litigation is rising. There are vexatious lawyers out there who are looking to raise many defendants in a potential big claim against companies when they look at their websites and can see that the websites are not, shall we say, in line with the regulations. Also, biometric data litigation is a big concern because of the potentially large awards that are being made by courts. So, apart from the policy, and what can you do to help your resiliency? Well, security. It's very important to highlight, if you're renewing a policy, any increases or improvements in security that you've made over the previous 12 months. We have a list of 12 controls that we recommend, and we'll have a quick look at that in a moment. The company must have a privacy policy in place, an incident response plan in place, so that if the worst happens, then everybody knows what their role is in dealing with the matter. Employee training is very important to underwriters these days, to have regular training of employees to be able to identify potentially suspicious emails or ones that or incidents where they're being otherwise phished. And also, underwriters look at backups of your data to make sure that they're regularly tested and that when they're needed, they work. So when we look at top security aspects, the ones in orange are the ones that we generally feel that insurers look to be in place, such as multi-factor authentication. That's an absolute minimum. That should be in place for pretty much every company that's looking to buy cyber insurance. But otherwise, endpoint detection and response, and also, as I said before, the secured, encrypted, and tested backups. Our Michael will be able to expand better than I on the technical aspects of these security features, so I will hand over to him. And many thanks for your attention.
All right, well, thank you, Edward. Very in-depth presentation of really what is two parts of what we need to do when we're dealing with cybersecurity. One is the insurance piece, and then the other is how do you minimize that risk? And so it's hard when you listen to some of the statistics Edward was talking about with Target and CrowdStrike and Oracle, because I'm sure most people on this call are not working for these large multinational corporations. But it should give pause to you to say, all right, if in fact that is happening to these large corporations who have million-dollar, if not billion-dollar budgets to manage IT, what can you do as a small to medium-sized organization? So for the next 10 minutes or so, I'm going to just talk about some of the basics. But I think before we get started with that, it's important to understand what we're talking about when it comes to things like cybersecurity. So one of those things is we have to define what is cybersecurity. And that is the practice of protecting systems, the networks, the programs. Basically, as a provider of IT or as an IT department, it's important to understand how you could be attacked. You've heard about ransomware, you've heard about phishing, and we're going to touch into that. But how do you predict it? How do you prevent it? What can you do? And how do you get your employees to buy into that? Because that is by far the biggest challenge, is if people are not doing what they're learning in practice, you're in trouble. It doesn't really matter what tools you have in place. Zero trust. You may have heard of it. It should be something that every organization is practicing. The concept of zero trust is that nothing gets trust by default. You only get access to those things that you need and nothing else. So that means nobody's an administrator. It means you need to verify, you need to use multi-factor, you need to only have access to those things you need. As an example, an organization that I'm familiar with got ransomware. But because it was a medical practice and it was only the technicians, because it was only the technicians who had access and who downloaded something they shouldn't have, only the technician data was affected. So it was a relatively easy cleanup because that was all that got taken care of. Backups were in place. It was resolved in a matter of minutes. CMMC, not going to touch too much about that today, but it is a model that the government is using. It's required with DoD, Department of Defense, and it's something that is going to be replicated across industries. As you'll see, as we talk about cybersecurity insurance, these types of compliance are items that are going to be required as part of your insurance policies going forward. Breach and data compliance are pretty much out there, so I'll leave those as things that are already defined. What I want to focus on is you hear about breaches all the time, but where are they coming from and what can you be doing? If you look at the diagram in front of us, you'll see that majority of all breaches start with phishing. And the reason it starts with phishing is because outside, all of these breaches, all these attacks are not happening from the middle school kids down the street who you think know how to do these little script hacks and everything else. It is an organized crime industry. Most things that are occurring are coming from one of two factors. They're coming from the fact of organized crime, utilizing this to run money, raise money, and the other is nation state. So China, Russia, who are sponsoring these for a variety of reasons. They may be looking to gather intellectual property from corporations in the United States, around the world as well. The US is definitely not the only place. And in fact, you see more of this outside the US because a lot of countries are not investing in those cybersecurity. So phishing is the biggest challenge. And the reason it's a challenge is they use what's known as social engineering. As an example, I would assume most people on this call have a LinkedIn profile. That's great. But what LinkedIn or Facebook or anything else does is it allows you to put information about yourself. So let's say we're in the year 2025. Perhaps you graduated from the University of Virginia in 2005. Well, they have that information. If it was on your profile, they put it out there and they send you an email that says University of Virginia 20-year reunion. You think it's legitimate. It looks legitimate. It has the UVA colors, everything else. So what do? You click on it. At that point, they just bring you to another site. It asks you for more information, gathering more social data. And then they utilize that data to access other things. When you hear about the breaches, whether it be Target or any of the other ones, Verizon is a big one, they're capturing your information. So most people are not utilizing proper password hygiene. What does that mean? They're using the same username and password for everything. So if you've logged in with Verizon and your address is joe@gmail.com and your password is your cat name Fluffy with the number 12 at the end, well, they're going to now utilize that on every other type of account out there. Whether it's a bank account, credit card, doesn't really matter. They're going to go in and they're going to take everything that's on the dark web that has been sold in these hacks and they're going to apply that. That is why we have to be concerned, is because we are giving out that data because we're not paying close enough attention. And it's hard to with everything that we have going on in the world. Outside of that, you've got regular viruses, you've got compromised security. I can tell you, as someone who does penetration testing, it doesn't take much for us to call up and say, hey, we're calling from the IT department. We're just checking this out. Can you please give me your username and your password? You wouldn't believe how many people, including in IT-specific industries, who will give that without a second thought. So what is the biggest thing you can take from today's presentation, or at least from my perspective? That is that human vulnerabilities are the reason for most cyber attacks. A recent Verizon report indicates up to 82% of all breaches started with human intervention. Why is that? Well, it takes less than 60 seconds for someone to click on a phishing email. Now, we talked about how these large companies were getting breached. Well, if you look at this according to Astra Data, 47% of businesses with less than 50 employees don't allocate any funds towards cybersecurity. There's so many things you could be doing for very little money, but they don't allocate anything to it. Then you have the fact that 51% of businesses who get ransomware pay the ransom versus taking time to lock things down. But it doesn't always have to work just that way. As an example, I want to say 4 years ago, don't quote me on the date, the San Francisco Metro Authority, whatever they're called out there, they got attacked by ransomware, and it hit their ticketing system, which meant that they couldn't sell tickets to the public for people to ride the light rail, the buses, whatever transportation. They did the right thing. And the right thing was that they decided not to pay the ransom, which was $1 million, and restore from backups. They had proper backups, they had everything. But the problem occurred because while they did this, they couldn't sell tickets, but they weren't going to just stop running the bus systems. The city needed it. So they continued to run them. And so for that $1 million ransom, they took the time, took about 3 days, they brought the system back up, and it cost them about $14 million in lost revenue. Would have been cheaper, would have been easier. But from a psychological perspective, if we're not paying the ransom, then that business goes out of, it just goes away. If people stop paying the ransoms, they have no reason to do that. So, things to consider. Why phishing attacks? We've already talked about that, so I will skip ahead on this slide for right now. Again, what is the biggest issue? It's that internal threat. As we've started moving to work from home, and I know here in the DC area, that's changing a little bit, but people are admitting they've shared work passwords. They have provided them to people who don't even work with them. Sometimes it's people are stressed, they're rushed, running from taking their kids to soccer practice, to dive practice and everything else. And I'm mentioning that because that's what I do. But I understand that. But again, these all started with people's relative carelessness. So what can you do? So first of all, develop and maintain a cybersecurity plan and a disaster recovery plan and test it. That is the biggest thing. These are not static documents. These are plans of what happens should this occur. What is that incident plan? How do you handle it? 2, security awareness training. Every single one of our clients must implement annual cybersecurity awareness training. Some people, some organizations we work with require it twice a year, and some compliance programs require it twice a year. It wouldn't surprise me to see some cybersecurity insurance audits requiring it more than once a year as well. Implement zero trust. Do not give everybody access to anything. Nobody should be logging in as administrator. While some people need admin access, they shouldn't have it on their account. Conduct risk assessments. Call up an IT company. Do it yourself. There's many ways to do it, but consider doing a risk assessment on an annual basis on yourself to see where you may have that problem. Consider cloud security controls. That is a way, if we have remote users and everybody's remote, we can bring everybody into a virtual network, making sure everybody is under control from there. Adopt MFA. I mean, that's something that should have been done a couple of years ago. It's required by every cyber policy I'm aware of, and it is something that's absolutely required. Essentially saying, even if somebody steals your password, they can't get in. Speaking of passwords, implement password management or consider passkeys using biometrics, using randomly generated codes that only your machine would get. It's very similar to SSL, and when you go to an HTTPS website, won't get into the technical aspects, but that's important. Invest in reliable tools. So EDR, XDR, MDR, these are all acronyms. You're going to hear them. They're mostly required on all cyber policies nowadays, or they will be very soon. Think of it like antivirus on steroids. Now we're just not looking for something where something has gone wrong. We're looking for any type of heuristic change, any type of change in behavior that allows us to say, hey, this machine is not behaving the way it should. That is what those tools do. Email security tools, anti-spam, anti-phishing, again, goes back to the fact that if we can stop people from getting those phishing emails, there's a less likelihood of them clicking on it. MFA, we talked about. SIEM is just collecting data. Automate and maintain patching regimen. That is very important. And it really automate is the important piece, which is making sure that everything is getting updated, especially the network devices and the workstations. While we talk about insider issues, we talk about the fact that people are clicking on things, there are still the fact that machines are not getting updated. So when you hear about Windows 10 and how you have to upgrade to Windows 11, you got to realize that there's a reason for that. And if they're not going to patch it anymore, not only are you out of compliance, you really need to consider that. And again, assume insider threats exist. They do, both from the fact of somebody making a mistake to people just doing things. So make sure you have those controls in. Even if somebody has access to something they shouldn't, that is really, if they don't have that access, they can't share that data. So again, it was a real quick run through, but these are things to consider. Happy to answer any questions at the end when we go through those questions. But at this point, I would love to introduce Herman from Eagle Bank, who will talk to you about some of the things going on with fraud.
Thank you, Michael. Appreciate everything is discussed so far on this meeting. And thank you again, everybody, for taking the time to meet with us. My name is Herman Abdallas. I work with Eagle Bank in the C&I division covering the RMs in the Tyson's office. I'm going to be talking about the frauds and the impacts that is faced with businesses in the banking industry. And the overview of fraud and why it matters. Obviously, we want to safeguard customer data, and that's the duty within the bank, but also organizations such as yourself to ensure that everything is safeguarded, as Michael alluded to. Laws and regulations require this. Obviously, cyber events, there's a reputation that takes place if you're one of those individuals who are consistently being attacked and being infiltrated. And so what is the overall goal here? As Michael alluded, is the monetary impact and what that looks like. And then in banking, that's what we face, because ultimately that's where they want to get to, and that's where they want to be able to approach to be able to extract funds at a very swift fashion. And so what do these types of attacks look like? Again, the number one is, of course, phishing. But now utilizing text. So smishing is also something that's starting to ramp up, as well as quishing with utilizing QR codes. However, what is the ultimate goal here on the bad actors for the bank is generally coming in as a business email compromise. And what that is fraudsters impersonating as executives or trusted vendors to authorize fraudulent payments. In a lot of cases, the CEO or the CFO's email is hacked, and then they send an email to their staff who has authorizations to process a wire or ACH, and they submit an email that's similar, tailored to their verbiage, and initiate some sense of urgency to send those funds out. A lot of, and sometimes, the easiest way to kind of alleviate those type of attacks is by picking up the phone and confirming. However, when you're in a rush, as Michael alluded to, sometimes deadlines that are met, maybe you didn't do something proper in the past and you wanted to go ahead and get this wire out, and now the wire is gone. And so now we're facing the result of that impact and whether or not those funds can get recouped. In general cases, once the wire is out, you're told once it's sent, it's sent. There's nothing you can do about it. There are situations that I can speak to later in the slides to discuss how you can be able to react in those situations. But this is not going away, unfortunately. And I'll talk about that later in some stats that we have. So what are the most common concerns? If we're at the place where the preventative measures were not met, well, we're looking at wire fraud, which is one of the things we see a lot, because wires are, once it's sent, it's instant. It takes a lot to get it back. You got to be able to respond immediately, reach out to the receiving bank, and hopefully being able to stop it before it reroutes to the next destination. A lot of times these wires end up going overseas, so it becomes very difficult to get those funds back. Obviously, direct deposit fraud is another one, check fraud. And then invoices is where another BEC compromise will utilize the vendor's email, and everything looks the same. The email language, the verbiage, and then the only difference is at the last minute they're changing their account number and saying, hey, this month's invoice, please send it over to this new account. And in some cases, they just send it without thinking twice. And as Michael alluded, that's the part where we want to make sure we're training our staff, training your staff, and making them aware of these scenarios. These are where they come quickly. And again, picking up the phone. I know we're in a time of technology and everything's moving fast, but the reality is when it comes to sending money, when it comes to your funds, you want to slow down at the end. You just want to take that second time. You want to verify. We set limits just for that scenario. If the limit is outside of your scope of business, then we want to know what's the reason for this wire. We want to have that extra conversation to allow everybody to be on the same page to making sure there's no illegitimate wire attempts occurring. And so you just want to be mindful of that. I know it's a scary time when you think about it, and it's so many different avenues that you want to that you have to play a part in. But cybersecurity is should be at the top of the list. Again, we talk about significant monetary losses incurred from these fraudulent attempts, the recovery efforts, and the potential legal fees that ensues. And then not to mention the operation disruption when a fraudulent transaction exists because your cash flow now is held. If you're not going to catch a fraud within the first 20 to 48 hours for a check, well, now the bank on the other end is not obligated to respond and having to get those funds back. They're going to have to do their own due diligence on their end to ensure that they're whole before they can go ahead and send back the funds in the event that we can catch it on time. And so again, that's all about timing. But these are the type of effects that impact businesses when it comes to fraud. And then the reputational damage. Obviously, when you're losing funds and you're losing the customer's trust, if emails are going out constantly and you're having to explain, oh, my email was hacked, this is not me, becomes a trend, then now we're talking about that reputation. And so you want to be mindful of that and making sure that everybody's doing the due diligence as Michael alluded to previously. Here's the most important thing, in my opinion. I'm big on relationships. I think that's the foundation of businesses and banks. And I think collaborating with your financial institution is critical. If you have that connection with that contact person that you have, either whether it's a relationship manager or if it's a branch manager that you work with regularly, having that relationship is critical in these moments because you want to have a full understanding of what your accounts look like. Are you exposed? Where are you exposed? Is there anything we need to do? How do we mitigate this? Can we get the proper training to understand that? And then making sure that you're speaking to your bankers, talking about what fraud preventative tools do you have available to allow us to help prevent this onslaught of fraudulent attacks. And so in our case, obviously, we're talking about positive pay, which is a check positive pay, and then we have ACH positive pay. So those are some of the tools that are discussed typically when it comes to fraud. And then again, that relationship with your banker, if you have that touch point, being able to reach out, send a text or an email, do a quick phone call. Hey, we sent the wire and it went out. And I've had that situation where a customer of mine's inadvertently sent out $63,000. And this was early on. I want to say this was in 2015. And he knew immediately once he sent the wire that it didn't feel right. And so he called me immediately and he said, I think there's something here. Can you look into it? I immediately got off the phone and reached out to the wire department. And luckily, because he called so quick and we were able to get in contact with the wire department, we were able to recoup those funds. It was a little daunting for the employee. He was with the company for such a long time and then decided to retire because it was his time. And he saw the writing on the wall because fraud was just coming at a very high speed at that time. And it was just a little bit much. But that's where the collaboration with your banker is critical, helping to prevent those measurements because it's constant and the attempts are always there. Obviously, the insurance piece, Michael alluded to, evaluating your options and making sure that you have all the necessary fraud preventative tools in your possession. Each company has its own size and has its own appetite for expenses. And so you have to make those necessary decisions, but just be sure to have some level, if it's not just the basics, to help mitigate those risks. constantly conducting risk assessments to identify those vulnerabilities. Again, it's the human element, right? I know those emails, those spoofing emails that your company will send may seem annoying, but they're here to work. They're here to keep you up at the top of your mind that fraud exists. And so you just want to be mindful not to click on anything that's fraudulent or that has a link that you're not familiar with. If you're not familiar with it, you just got to just take a step back. And that's the way you want to kind of make sure that your employees are understanding that concept. Um, you know, be skeptical, verify identities before taking any actions. Um, um, by prompting calls, if you're speaking to a customer of yours and they're calling you and something seems off, call them back. Use the number on your system in your files, making sure that you know who you're speaking with. If the email sounds off, even in the middle of an email, I've had a situation where I was in an email thread with a client, and then mid-email, the tone changed, and it went from deposits to a withdrawal question. And I thought it was a little strange. And so I picked up the phone and called the customer and asked if that last email was hers, and turned out it wasn't, unfortunately. And it's a scary situation when you realize that this can happen in just a blink, just a second. And if I continue to engage in that customer, now I'm dealing with a bad actor, and they're trying to get tips on how to extract funds from the account. And so again, figuring out ways, using passphrases, obviously not passing out ID passwords, making sure that your computer is constantly uploading the updates, phone updates. Try not to go on social media as much to overshare. And obviously, you want to lock your desk when you're leaving your office. And then we have some data here from the Association of Financial Professionals. They've been doing these surveys for about 21 years. And so essentially, these are the data that are real. So 79% of organizations reported attempted fraud or actual fraud payments. That went down from 80% last year, but again, not much. 63% of organizations reported VEC, and that is pretty much in line with last year, which was at 63%. ACH fraud attempts have gone up from 33% to 38%. So the vulnerabilities are still there. Check fraud, surprisingly, check frauds are still up there. It was 65% last year, down to 63. Obviously, with check fraud, you have positive pay. That is a service that I find, in my experience, has been very helpful for my clients. ACH positive pay as well, which is a tool utilized there to be able to offset any or cross-reference any ACH debits in real time. Now, if you're a person who's meticulous and every day is checking your account and making sure every account the debits are legitimate, then more power to you. But that's a lot of resources to allocate to managing that process. So obvious positive pay, ACH positive pay are services that are here to help you. Your employees are the backbone of the company, and so training them and making them aware and making them feel empowered to be able to make those decisions. And not feel concerned and worried of asking questions, making sure everything is an open door policy. Verify, verify, verify. And I thank you so much for your time today. I look forward to any questions you may have at the end.
All right, thank you so much to our three panelists. At this point, I am going to bring all three on screen, and we're going to enter our Q&A portion. But first, just want to thank you all for being here today and joining us. I know it's difficult to edge out an hour on a Thursday, so we really do appreciate you all being here. For the Q&A, we already have two questions, but just make sure that you're using the Q&A chat in the upper right-hand menu. There's a chat and there's a Q&A. So just make sure that you're using the Q&A so we can keep them all in one place. But Michael, there was a question for you, which was, do you find that paying a ransom results in getting your data / ops back quickly?
So there's two questions there. The first is getting your data back, and then the second one is quickly. The average recovery time in the report, I'm trying to remember if it was Verizon or which one I read, was that it takes approximately 24 days to recover from a ransomware attack. So if you think that, oh, okay, you go on there, you make that payment via cryptocurrency, and then all of a sudden you get your stuff there, it doesn't work that way. Yes, you're going to make the payment. Majority of the time, you will get that decryption key, because again, if they don't give the key, people are going to stop making the payments and they stop making their money. But the problem is that one, a lot of times there are other things going on. Sometimes it's the whole double extortion. So, oh, well, we have the data and we've encrypted the data. So we'll give you the key to get your data back, but we may release the data unless you pay us now twice the extortion now that you've agreed to pay it. So first thing is you don't want to just pay it right off the bat. There needs to be a strategy. 90% of the time you want to get the FBI involved. They have a division that handles that. It allows them also to track it, because one thing to realize is that while you have ransomware out there, the FBI and other organizations in this country have decrypted a lot of these. So you may actually be able to get the key without having to pay anything if you want to go that route. But to answer the question, no, you typically aren't getting it back quickly when you get it back, and you don't always get 100% recovery as well. So if you have backups, that is usually the best route to go, because even with the ransomware, it's going to take time to recover.
All right, thank you. Just to quickly answer this question, yes, we will be sending out the slides and the recording of the presentation, and we do encourage you to distribute it out to your networks as well as a sort of a training, but that will be sent out later this afternoon. Another question, I think this is for Eagle Bank, is positive pay. Positive pay is too much to administer. Can we increase the threshold?
I saw that question. Can the person elaborate when they mean by increase the threshold? There's two versions of positive pay. So we have the standard positive pay. If you're a person that's writing, I would say 20 or more checks a month, I would say going with the standard positive pay where you're uploading your check file. If you're writing computer style checks, which positive pay does require, so they can be able to read the checks properly. So if you're utilizing computer style checks, you're uploading it from some accounting software where you should be able to then port that file, which would be a CSV file, into your online banking portal. And that should be able to cross-reference, and you should have an administration team within that, or the implementation team within your bank, to be able to cross-reference and make sure that the file is not corrupted. And so that would be the simplest way, and I wouldn't imagine that being much of a lift once you get that feel for it and being able to upload those files. It'd be one of those one-offs, or if a fraudulent check comes in, that would come as an exception, which you would have typically up until midday. In our case, in Eagle Bank, it would be to 2:30 to be able to make a decision to pay or return the item. We also have reverse positive pay for those low check volume users. And for the low check volume users, you're just receiving those exceptions when the checks are being presented. Again, you'll have till 2:30 to make that decision to pay the item. So if you wanted to elaborate on the question in terms of increasing the thresholds, happy to answer that question as well. Maybe I answered your question, but if not, please let me know. Thank you.
It looks like the person did put a point of clarification. They say right now it's set for any online payment and all manual checks. We use manual checks for some state tax filings.
Yeah, so is the threshold, are you referring to dollar amounts, meaning you want to be able to not have to verify checks for a certain dollar amount? If that's the case, I don't believe that that's something that's available, but something to look into for sure.
I will say, I'm also going to point this out at the end. All the contact information for each of our organizations is going to be up. I do encourage you all to follow up in an email,
Yes.
and I'm sure all of our experts will be happy to answer questions. So we're going to move on from that one from now, but I do encourage that person to reach out and ask that one-to-one. All right. Our next question is going to be from Michael. What's your experience recovering from ransomware by paying versus recovering on your own?
So, I hate to give this statistic because it makes me scared, but I can say that in the 23 years of business, we've only had to deal with one ransomware with our client base. So that is a great thing for us. Now, that being said, both in that one case, which took place about 4 years ago. So if you do enough to prevent it, hopefully you don't have to deal with it. In that one case, it was an isolated incident where, again, and this is 4 years ago, but it went down to the fact that this person only had access to a very limited amount of data. So the only thing that was affected was a single machine and a single share. And in that particular case, we were able to restore backups. We use what's called multiple version backups, so that even in most ransomwares today, we'll try to encrypt your backup as well. So it does you no value. Oh, I got a backup, and then you restore it. We do multiple versions so that you are able to go back 2 versions, so you get beyond the encrypted version. That being said, unless there's an absolute reason that I personally do not believe in, I would never pay the ransom. Every one of our clients are backed up multiple levels. Every one of our clients use multiple versions. So personal experience, I've only done from restoration, and that restoration took us 4 hours to just make sure nothing else was on the network. The actual data backup and recovery was about 25 minutes.
I can elaborate on that a little bit, Reese, if that's okay.
Yeah, go ahead.
Yeah, from an insurance point of view, obviously, carriers deal with ransomware losses pretty much more than any other type apart from social engineering. And at the moment, the current rate of paying out a ransom for such an event is around about 1 in 3. So 1 in 3 claims, the ransom is paid. This is reduced over the last 2 or 3 years from 1 in 2. And the main reason for that is, as Michael said, was that more and more insurers are insisting upon, having effective backups in place. And if you have the effective backup, you can then, restore the data within a reasonable amount of time. Obviously, insurers don't encourage payment of ransom. That money goes to bad places, to bad people. But obviously, if it needs to happen, then they will help you and obviously reimburse you for whatever ransom is paid out. But yeah, at the moment, about 1 in 3 ransoms are paid.
Thank you both for answering that question. It looks like questions have slowed down, so I am going to throw out one just for the 3 panelists to answer, and Edward, we'll start with you, since you just closed off. What is one of the most common misconceptions that people have about your industry or that business or organization owners are facing when they're first developing a cybersecurity plan or first trying to defend against fraud, and how do we combat that in 2025?
Well, for my industry, the main misconception is the insurers always try to not pay claims. I've been in this industry for 35 years now, and I can tell you that the collaboration between insureds and claims departments is still really, really good, and insurers will do all they can to help insureds navigate their way through the claims process to a positive response. In terms of cyber insurance, I think that sometimes people feel they have to have every piece of security in place in order to get coverage, and that's not the case. Basically, one insurer will differ significantly from another in the areas of security they insist upon. So you can get one carrier that will refuse to write a risk, but another carrier who will, even though the insured does not change its security profile. So, and really, the minimum standards imposed are not maybe as rigorous or as difficult to put in place as people might have thought.
Thank you. Armand, did you want to comment anything about what you noticed in the banking industry?
Yeah, like I was alluding to with business email compromise, it's a scary time when it comes to trying to do the service to a customer in an efficient fashion, right? We all want to make sure the customer's taken care of. We want to respond efficiently. If a customer's asking to add a signer, unfortunately, you can't just take the email for what it's worth anymore. You got to call. You got to do the verification. You got to be due diligent. If you're forwarding an email to a colleague internally, in our world, we don't forward unless we call the customer to verify. Now that's the nature of what we're dealing with, and so it does slow things down a bit. I think if you're doing your job and explaining it to the customer and making sure that they understand that we're trying to take the necessary measures. We're not looking to slow up the process. We're not trying to create these these limits to prevent you from being able to do your job at an efficient level. But at the same time, if they're out of sorts and they're not your normal, if you're asking me to give you a wire limit of 5 million, but you're only doing an average of 1 million, but that one time every 6 months you want to do that 5 million, no. That 5 million is an exposure that you're going to have throughout the rest of the time. We can do a temporary wire limit increase at the time that you want to do that, and it's within a day. We'll do it. We'll do the temporary increase within a day. We can set the time if there's an urgency in terms of timing. But those are the type of conversations that I've noticed that are happening more, and customers are being more receptive to it because fraud is just becoming such a big thing. So yeah, I think that's one of the main things I noticed.
Thank you. Michael, did you want to close out on that question?
Sure. I mean, I could probably do a presentation just on the cybersecurity. We'll call it myths for that matter. But there are three pieces I'd probably touch upon. One is people think cybersecurity is a technology issue. It's not just a technology issue. Yes, technology is a big part. It's got to be a holistic approach. It's an issue of people. It's an issue of technology. And it's an issue of risk. All things we talked about in today's call. The second one is people think it's only necessary for large corporations. In fact, most cybersecurity attacks are on small businesses. And the reason for that is because small businesses aren't taking the precautions. They're easy hits. And small businesses, when people look at small business, they think, oh, 1, 2, 3-person companies. Small businesses, if you look at the government definition, it's 500-person companies. We're talking $100 million companies who have the money to pay the ransoms to do this. And then the last one is it's too expensive. Yes, everything we do with cybersecurity and everything we do with risk mitigation is about determining what is the right fit for you. It doesn't make sense to, if you're a company that does $100,000 in revenue, you're not going to spend $20,000 in cybersecurity. But there are things you can do. You can do MFA at no additional cost. You can do training at very little cost. But the real question isn't about what does it cost you. The real question is, what does that cost if you don't do it? What happens when your $500,000 company gets exposed for more than $500,000? Okay, do you go out of business? Do you run into financial difficulties? Do you violate certain compliance aspects? Those are the things you got to look at beyond that. So the biggest items there are, again, yes, it's for all businesses. It's not just an IT issue, and everybody needs it.
Awesome. Well, thank you so much for those thoughtful answers. I did want to ask one more question, and then we're going to have to move on and close out. But I'd be remiss if I didn't talk about AI. I know that that was mentioned in the presentation, but I was hoping this Q&A section for you all just to expand a bit on how AI is shifting in your industry and what you think people should be most alert on in 2025, and then moving on to 2026 of how AI is creating threats in the cybersecurity or banking landscape. And Michael, we'll start with you since you just closed out.
I mean, you're really giving me these real short answer questions. AI could do multiple sessions on. I mean, AI, the power of AI is both positive and negative. With the positive aspect is we are able to utilize artificial intelligence for training for the good. We are able to utilize it for being able to look for things that we don't have the time, the resources. It also helps us reduce the costs. Right now, we have NOCs, we have SIEMs, we have labor invested people looking at all the logs and everything else. AI is shortening that for us. So that's the great thing about AI, is it's giving us the capability. However, just like anything else, AI is giving that same capability to the threat actors, to the hackers. So AI is allowing them to develop better ways to phish, to make phone calls. AI can do all these things to get people to give up data. So AI is absolutely taking over the industry. From an IT perspective, AI and cybersecurity are the big hot button issues, and there's a lot more to come, but that's pretty much where I'll leave it for today.
All right. Edward, did you want to comment anything to that point?
Yeah, well, in the insurance industry as a whole, AI is being utilized with a view to, increasing productivity, increasing efficiencies. As Michael alluded to, it's absolutely a double-edged sword as regards cyber. Underwriters do have AI as one of their major concerns going forward. As Michael said, the bad actors try to stay one step ahead of the people who are trying to catch them, and AI is a really good tool for them. I hear things like, an AI avatar might well sort of join a Teams meeting, and there's it can be utilized on that basis, so that you think you're speaking to someone and you're actually speaking to a whole different person looking to scam you. So yeah, it's a very much a concern to underwriters going forward.
Going to close out, Arman?
Yeah, I mean, Michael alluded to it, but to the point, what we are fearing is eventually, as I was alluding to, phone calls, is that AI can then mimic voices, right? And so now we got to figure out, we got to start preparing for that eventuality that will occur. And so that's one of the biggest concerns that I can think of, that we're coming to grips that eventually a phone call might not just be enough. And how are we going to do that? And what's that going to look like in the next year or two? And so we have to prepare for that. And for me, that's one of the things the talking points that we've heard as a concern.
Well, thank you all three so much. And I would say, too, just as a general advice of staying in contact with your vendors and people, and staying informed of threats is always a good way to stay on top of the threats before they impact your organization. So speaking of that, we do have the contact information for the three organizations that we're representing today on the topic. First, if you have any questions about your insurance or how to get started building an insurance plan for your organization, you can reach out to Jack Loker with McGriff Insurance. And this will all be sent in a follow-up email, so don't worry about writing it down. For any questions about your IT setup or forming a cybersecurity plan for your organization, feel free to reach out to me. And my contact information will be up there, and I'm with Opfinity. And then for your banking needs, and just for any concerns that you're having right now with the banking landscape and staying ahead of fraud, feel free to reach out to Michelle Haley and Matthew Agresti with Eagle Bank. And both of their contact information is also going to be on this email and sent out in a follow-up email. But again, just want to sincerely thank everyone for attending today. We hope that it was worth your while and that you're going back to your office with some useful tips and tricks. And enjoy the rest of your Thursday and have a great sunny weekend. All right. Bye, everyone.
Take care.